18,500. 18,000. 22,000. 26,000. 20,000. And then what is the total? Everything. This one was 10,000. Okay, and then the total, we had 26, 32, 14, 18, 22, 26. How much?
168,000.
Okay. So now we have the variable cost, right? For both the organic brand and the super organic brand. So now what we want to find is the total variable cost for both products, and that is for the whole business. Therefore, we are going to add the variable cost from the organic plus the variable cost from the super organic. So what does that give us? 12,584 plus 26,000. Plus 26,000. Okay. Then 16,000 plus 32,000. 16,456 plus 32,000. 48. 456. Okay. So 7,260 plus 14,000. 9,680 plus 18,000. Sawa. Mwalimu. Simile kwa chogova tizeko sigayo. 27,000. Fast. Give me the figures. 27,000.
680.
And then for October, 374. For the month of November, 300. For the month of December, 30 plus 14. And what? Okay, so now total fixed cost. What did they say were the total fixed costs? They told us that the total fixed cost was how much?
8,964.
8,964, right? So our total cost is 8,694. And that goes for all the months. 8,694.
900.
8,964. 8,964. 8,964. 8,964. Fine. 8,964. 8,964. Okay. So our total cost now. Different present my total cost for our business. We will now add the total variable cost for the two products. Yes, is that a hand?
Yes. Oh, makarira. 8964 ya bwerabwazi.
Iyo mkabelenga pa page. Yanghani manda.
Etokera uzi kuti mapoint. Para
where they had even given us the price for the sales. Why is that person a total variable cost, father?
Okay, it is.
Okay, very good. So 8964 plus 38584. 8964 plus 38584. 38584. 47,000. 47,548. So if 47,548 is our total cost of production that will be incurring in a month, that Tazama, that garbage recyclers will be incurring in a month. So it includes the total variable cost plus the what? It includes the total variable cost and the total fixed cost. Okay. The rentals, the salaries, the what, the buying of the manure, buying of the bag, everything. That will be what they will be incurring in a month. 47,548 for the month of June. For the month of July, when you add 8,964 plus 456, 57,000.
420.
For the month of August, 30,224. 224. For the month of September,
6,694.
for the month of October, for the 2,000, 338. November, for the 8,000,
274.
for the 8,000,
274.
274. December,
53,000.
so far so good. Zimbeka, any questions? Or any addition or subtraction? So now, we'll go on to make the profit plan, right? Because initially, they had told us that for us to make to do the profit, we first of all have to have the sales, which we already have, the sales plan, and then we also have the cost plan. So, are we able to make the profit plan?
Yes.
You want to try? You don't want to try. Okay, so they're telling us that the profit plan shows the profit of your business, shows the profit your business is likely to have each month. Okay? You follow these steps. 1, get the information from your sales plan, which you already have, and the cost plan. Okay? Put the information in the profit plan form. Do the calculations on the profit plan form to find the likely gross and net profit for your business in the first year. The plan must show that your business should expect to make enough profit to allow for something to go wrong. For example, your sales might be lower than you expect. A machine might break down. Mutunga basi machine yafu. you're sewing, the machine breaks down. So you must make sure that everything is covered. So let's make this profit plan. Our total sales value was how much? For the month of June.
51,758.
Are we all agreed? At everybody? Eat. Okay. 51,000.
748.
748. For the month of July,
65.
65.
184.
For the month of August,
29,898.
29,000. For the month of September,
38,856.
856. October,
46,772.
46,772.
772.
November,
55,008.
55088. December,
61,444.
614. Okay. And our total being
348,992.
and then our total variable cost. There's nothing that's in that total variable cost. Each part jump. I can't see. You even show me where you're going to write it. Okay, so you can write it there. Oh, not 88. Okay. So the total variable cost, you said it's how much? 38. And then for the month of August, for the month of July, this one, eh? 48456. August 21 260. For the month of September 27680. For the month of October 374. November 39310. December 44036. Okay. So now we have to look now at the gross profit. Okay. Hapa mwana katenga total variable cost, eh? Okay. So we haven't gotten the total cost. So the profit that we are going to find at this stage is ankara ya gross. Gross profit meaning that you order a product for 100 watt. Okay. The cost of the cost of bringing that product to your shop is 100 watt. Okay. And then you sell that item at 150. The 150 is your gross profit. Okay. Because that 150 is nachosemo ya transport. You haven't removed the, because remember when we were calculating Kumbura code, we even said okay, for rent this amount will be contributed from this product. So the 150 will be the gross, okay, gross profit. for us to find the net profit, we have to remove the transport, all those things from that 150 of the total sales. Okay, so gross profit. Gross profit will subtract the total sales from the total variable cost. Our total fixed costs are constant because they are fixed. It's different from the variable costs where they change when the production changes. If they produce more bags of fertilizer, they will have to incur more variable costs. So these are constant. This number is constant. Okay? From there on, we can now find the net profit. How do we find the net profit?
Subtract.
My secretary.
Net profit kuti ika
Inde?
ita gross profit figures aya subtract
So, yambani ya first thing to achale calculator.
4,200.
Atija sign ya tero.
Fusari namba. Ifuseni.
13,164 minus 8,964.
4,200.
4,000
200.
16,728 minus 8,964.
764.
7,000
764. 7,764.
7,000
764. 244.
Negati.
Negative 244. August was 2,204.
2,200
4,434.
4,000
454. 6,734.
34
6,734.
8,444.
80
Four attack.
4.
Ni 2 ni 8.
8
Thank you. Okay, so now that we have the sales plan, from the sales plan, together with the cost plan, we've managed to come up with a profit plan. So the next thing that we are going to do now is to come up with a cash flow. What is a cash flow? Cash flow. The flow. Zishata flowing, right? Flow. So the way our business will be handling the cash. Okay? So page 87. First of all, we are told that the cash flow is a plan. The cash flow plan is a forecast of how much cash you expect to come into and go out of your business each month. Okay, the cash that is coming in and the cash that is going out. The cash flow plan helps you to make sure that your business does not run out of cash at any time. Okay? So, there are many reasons that your business may run out of cash. For instance, you have to build a factory, to buy equipment, to buy raw materials, and that is all before you can even sell. Okay? You start with this amount of money, but because you have to use the money somewhere else, like if you want to buy, you have to pay rent, you have to buy equipment for the shop, you have to buy what and what. So you find out that your money runs out. And also, if you give out credit to your customers, you do not get paid immediately. For example, you start a business, but then you give out can you put it? What is it? The steps for making a cash flow plan. Okay? Cash flow plan. So you've got you've got the months, and then you also have the details. Okay? For example, you are told that you have to have cash at the beginning of the month. This is the amount that for example the example we are looking at of Jen. This is the money that she has put in the amount of money that she expects to have in her bank account when she starts operating. Okay? And then cash from sales. Also have cash from sales, and then there are also cash from credit sales. Okay? And then if at all you have other sources of cash, for example, you get a loan and the like, also you have the other cash in. So after that you add all that, then you have your total cash that you have for that month. Okay? And then cash out. Okay? Cash out is in form of purchase of goods, in form of paying salaries, purchasing of equipment, loan repayments if at all you had gotten any loan previously. Once you pay that loan, it will be a cash out. Okay? And then other payments that you may have in your business. Okay? So, we'll go again with this formula, which is cash at month is equal to cash at beginning of the month plus total cash in hand. Total cash in minus the total cash out. Okay? This formula, total cash at month end, cash at month end. Okay. When you are ending the cash, when you are ending the month, how do you find the total money that you have at the end? So you use this formula. Cash at beginning of the month plus cash total cash in minus the total cash out. So Patrina, cash beginning of the month, cash in, total cash in, Tina total cash out. For example, for this example, we are told that Jane and Mary are city garbage recyclers make their cash flow plan for this year. They start in April, so their cash flow plan is as follows. Remember, when we are talking of my sales, when did city cyclers start selling? In April, right?
June.
They started in June. But then they are setting up of the plant. When do they start? April. So they start with an initial amount of 47,200. $47,200 as cash at the beginning of the business. So in April, do they have any sales?
No.
They don't have any sales in April, right?
No.
So cash from sales, 0. Do they have any sales from credit sales? Do they have any cash from credit sales? They don't have. Do they have any other cash in their business in April? So what is their total cash in?
Zero cash.
They have 0. They have, in that month, they haven't brought in any money, right? The business has not brought in any money. Apart from that money they have when they start the source. And then, what do they purchase? They purchase something in April. Yes. They don't purchase anything.
Yes.
Are you sure? Okay. Do they pay salaries?
Yes.
How much? 3,850 kwacha. Okay. Did they purchase any equipment?
Yes, they did.
How much?
80,000.
Did they pay any loan?
No, they didn't.
Because they don't have a loan, right?
Yes.
Were there any other payments during the month of April? How much? 7,000? Okay. So what were their total cash out? My pesa point. How have you found 41,000? 41,000 and 450.
We have added
What have you added?
the salaries
The salaries,
and
equipment,
equipment and other payments.
and it has given us
41,450.
41,450. Okay. So, what is now our cash at month end? Remember this formula. Cash at month end is cash at beginning of the month, this one, plus the total cash in, this one, plus the total minus the total cash out, minus this.
Cash at month end is 5,000.
5,750. So this is the total cash at month end. Meaning that for the month of May, we'll start with 47,000, right?
No.
Eh?
5,750.
We'll start with how much?
5,750.
Yes, it's because in the month of April, we had remained with 5,750. And we don't have anyone else to go and to find us this, we don't have this 47,000 anymore. Because it has been used up. Therefore, for the month of May, we'll have 5,750. Okay? And then, in the month of May, do we have any sales?
No.
0.
0.
Cash in from credit sales.
0.
Other cash in.
0.
Total cash in.
0.
Okay. Did we purchase anything?
Nothing.
And you didn't pay any salaries, right?
We paid
We paid salaries.
Yes.
How much?
3,850.
And we bought another equipment.
No, we didn't.
We didn't buy equipment in April, in May, right?
Yes.
Okay. Did we repay any loan?
No.
But there were other payments that we made.
Yes.
How much?
2,600.
Okay. So, what will be our total cash out then?
6,450.
How did you find it?
Just the same one what they did those payments. Yes. And the salaries.
And it has given us
6,450.
6,000?
450.
Okay. So, Manje, what is our total cash at month end? find numbers with brackets like this sign, okay, it means that that is a negative. So meaning that for the month of June, we'll start the month of June with it. No, you don't start with nothing. You start with money. Yes, that is money also. You won't start with 0 here. Okay? So, for the month of this business started producing in June, right? So in June, how much did they produce? No, no. I have the cash. How much was the cash? Total value sales. 51,000. 51,000. And then, did you have any cash from credit sales? 0. Did you have any cash in? Any other cash in? Did you have any cash in? 51,000. Okay. So, the cash out now. Did you do any purchases in this month? For us to produce, we had to buy, right? So, how much did we buy? How much did we use?
58,584.
Isn't that it?
58,584.
Our total variable cost from our profit plan.
Yes.
So, right now we're getting figures from here.
Yes.
So that's 38,000. 38,500. Okay. And then what are the salaries? Purchase of equipment, loan repayment, other payments. 450. And then what was our total cash out? 46.